Okay, here's a look at the E-mini S&P for Wednesday, May the 11th, 2011. We're looking at the market profiles here. We always like to start with them. So this is today's market profile and volume profile, and this is what occurred yesterday. And obviously the one in the middle here is what occurred overnight. We had mentioned that earlier the 48 area would be likely support. As you can see, the market did not get down there in the overnight session. It actually went up and made a new high. Our next area of likely support was around 39, and you can see that once the market had broken here, it went down and did pierce through 39, but notice how 39 did hold, and then of course our next level was at 35, and the market did dip below that right here, but close a little bit above it. So this is obviously a key area here, the 35 area. If that can't hold, then we're likely down to 31 and then maybe even down to 23. So we're going to keep monitoring that 35 level overnight and in around the 39 area, 39 to 40, to see if that can hold. It does appear that this kind of sell-off today was the kind of sell-off that is a little bit difficult to read at this moment, at least from my point of view, in that the market attempted to break from the consolidation yesterday and did so fairly convincingly, although I did mention that it wasn't a super strong day up that we would really expect after that kind of consolidation. So the market has just come all the way back into the bottom of that consolidation area, and now it's really a question of whether or not it's going to have any continuation lower, or is this just really longs liquidating and have no real strength to push the market any lower. That could be really what happened today. Although it did really have kind of the feel that it was pretty strong selling, and maybe it wasn't just long liquidating, but it was more. I mean, obviously there was some of that, but there might have been a substantial hunk of new selling. And if that's the case, then the market will hold below 35 and test 31. And obviously if it can get below 31, then we could have a pretty good dip down to about 23. So that's really what we've got to monitor here going forward. We take a look at these profiles from the regular trading hours. We also use them. As far as our particular trades were concerned today, you can see we had a short trade early in the day here, another one set up here, and another one set up here. We did have some longs indicated, one here, and one here. And we did take this first trade. Unfortunately, it just went sideways, had that little pop-up and then the really good down move. We did not take this long trade because, of course, we were in the red filter. This short trade here didn't quite pull back up to get us short, so we weren't able to get in on that trade. We had our second trade right here, as you can see, the little dash red line we got filled right here, had a nice down move for us on that one, so good profits on that trade. Then the market went and made new lows, as you can see here, a new low here. We actually had this indication to get long right here, and it did have a good bounce. Although this was a precarious trade, obviously, but it did because of such a strong down day. But it was near our known expected support in the 35 area. It was along just below 35, just a tick or two. And so some of our traders took it and some didn't. Because the neutral filter at that time, we would not consider it one of our trades that fit into our 2 out of 3 model. So for that reason, it would not be considered a trade. So just the 2 trades today. One was a break even and one had a nice profit. Any questions or comments, don't hesitate in getting a hold of us at info@eminidaytrader.com. That'll be it for today. Thanks for watching, and We'll see you again tomorrow.